Hi everyone, we just covered in the previous tutorial 20 how to customize categories. What we're going to do now is we're going to now pay the employees, and we can now determine whether we've gone about setting up their cards and their categories correctly based on the report that we're trying to derive. So this is quite a straightforward process, processing pay. I'll cover some of the components now. So we go to payroll over here. Process payroll. There's a few different variables. You can opt to pay each individual employee individually, or you can batch it all up together, which is my preferred method. This stuff is important. So, for example, if I was doing this week's pay run, I would obviously be processing this on a Friday, which is the 19th of the 6th. And it's for this week, which goes from the 15th to the 21st. 15th to the 21st, which is Sunday. Okay, so that's the week, and that's when the money is going to be transferred into the employee's accounts. This stuff's important because it works out, especially the payment date, it works out when the pay-as-you-go tax obligation becomes valid in terms of when it needs to be submitted in our BAS statements. Going to hit next now. Okay, so what I'm going to show you now is if we needed to change these pay slips. So if we go into Mary, for example, over here, we're going to be paying from our check account, and it's check 78, and the payment method is by check. Now, the reason why that defaulted electronic is because we, when we created their cards, if you remember, we put in their bank details and we selected electronic. So this is now set up as a default to automatically pay them into their bank accounts on that particular pay date if it's set up in your banking system. But I'm just going to change that to check because our exercise says check, and it gives us a check number. Now, if Mary had worked overtime, we would obviously put in the overtime amount. If, for example, she'd worked on a public holiday, 8 hours, we'd put that in here. So you can make further changes to this if required. Let's assume she took a day off, holiday leave, personal leave. You can put those hours in here. So this can be adjusted according to her time sheet. But this essentially tells you the gross wages, how much net pay she's going to get, superannuation additional amount of $50 which we created, the tax withheld, based on the tax table, whether she's got any entitlements, in which she does. So this is how much of the entitlement she's accrued for the week, her work cover insurance, and her superannuation, which is a liability to begin with, and then it will become an expense when it becomes payable. So that's how to interpret the pay slip. So we'll click on OK. We'll look at Alan's now. Now Alan's on a salary, so irrespective of how many hours he works, he'll still get paid the same amount. I'm going to change that to check number 79, and we're going to change that to check also. Now his union fees are there. That only applies to him, so that's going to be deducted from his pay. Tax is obviously going to be deducted from his pay. He hasn't taken any time off for holiday or personal leave. Work cover insurance is there as well. And his 9.5% superannuation is obviously being withheld as well, and will become an expense once it gets paid out of the account. So that's Alan's. So he's on a salary. We click on OK. Now we can review pay details. We did that by going in and clicking on the arrows and making changes. We can click on record now. You're about to record 2 pay slips. That's fine. Now at this stage, it depends on how the organisation does things, but what I typically do is I usually print the pay slips off. All right, so that we can get them batched and ready for payment. All right, so this all differs as to how an organization will do things, whether they're paperless or not. But that's typically what we do here. This tells you the total amount of pay that needs to come out for these two pay slips, these two batches. Then I would proceed to email the employees the pay slips, but we haven't got email addresses set up for our employees, so they haven't appeared. But we have selected to be printed, so we can print them off individually as well and personally hand them to our employees if required. And then we'll proceed to finish. So once we hit finished, it obviously then gets recorded. If I go to transaction journal under payroll, nothing's appearing because of the date. We selected the 19th of the 6th as our payroll pay date, and hence you can see both pay slips in the transaction journal. So that's obviously hit our account, so that obviously that's accurate. But what we'll do now is we'll have a look at the report and make sure that it lines up with what our exercise has mentioned. So it's payroll report. It's the first one, activity summary. Once again, I'm going to customize these dates, 19th of the 6th. Display. Okay, so we've got total wages, which is correct. Total deductions, so $50 deduction additional super, $2.88 for Alan's union fee. Then we've got the taxes, which is correct. Obviously, net pay is going to be correct because it's simply wages take away your taxes, get your net pay. And then you've got your expenses, which is your superannuation, which is also correct. Notice how the $50 additional super is in this category here as a deduction. Because it's not an employer expense, this is coming out of Mary's pay, whereas the 9.5% is on top of the person's salary or on top of the person's hourly rate, hence it's an employer's expense. So that's the interpretation of this report, and as you can see, it is all accurate. Next thing we want to have a look at is our liability accounts. So I'm going to close that one off. Close this off here, go to my accounts list, go to liability over here. Now, first things first, I want to have a look at my pay-as-you-go withholding payable. This is a tax that we're withholding from our employees that we need to pay back to the Australian Taxation Office in our bank, in our BAS statement. It's meant to be one. I'm just looking at our exercise here. It doesn't actually mention figure here that I can see. Oh, it does, yes. Pay-as-you-go withholding payable 610054. That's accurate. And superannuation fund 1, $184.40, which is also accurate. So that's the superannuation that's been withheld from our employees. So this is what it needs to look like. It's a very, very basic payroll run. It will give you a good understanding, though, of what is required. For a small organization that has up to 5 to 10 employees, that's pretty much all you really need to know. But where the organization gets a little bit large and you've got more than, say, 5 or 6 employees, it gets a bit more complicated because in that scenario you've got a range of different employees with different situations. Some want to contribute more super than others. You may have salary sacrificing that you need to be aware of. You've got different awards and different conditions based on those awards that you need to be aware of when doing the payroll. You've got a number of different, I guess, a number of other type of variables that exist, and hence your understanding of payroll needs to be more in depth or more detailed in order to properly set up payroll so it's accurate. But as I said, for only a few employees, a small organization may have a few internal administration staff. They're usually all under the clerical award. It's fairly straightforward. They typically work full-time hours. The pay doesn't really vary from one week to the other. So hence, it is usually quite straightforward process. But what we'll do is, for those that are interested in more advanced payroll functionality, we have got a different what's the word for it? We've created a different package, an elective package. That's the word I'm looking for our payroll. And that elective looks at the more advanced functionality of payroll, and that looks at other scenarios and how to further customize payroll if you are looking at an organization which has more than 5 or 10 staff. That concludes payroll at a basic intermediate level. Next, we'll look at bank reconciliations.